In previous videos, we've discussed topics like risk management, using logic with trading, separating emotion, but today's video has to do a little bit more with strategy and making sure you follow that discipline with practice. Now I'll explain what I mean. See, if you've used any basic application like Robinhood or Webull, you've probably seen the term margin trading thrown around. Now, a lot of people don't know what exactly it is. A lot of people don't realize how detrimental it could be to their trading career, but we're going to take care of that. Hi everybody, my name is Harchin Singh. I'm from 3Tier Investing, and today we're going to be talking about margin trading. So let's get right into it. What the hell is margin trading, right? So essentially what's happening is you're borrowing money from the broker and using their money to invest. Now here's the thing, obviously you pay some type of percentage to borrow that money, right? That's a guaranteed rate. It depends on which broker you're dealing with, and that can vary. But at the end of the day, it seems like a foolproof plan. I don't have the money to put into the stock. They've got the money to put in the stock. I get to keep all the profits, give them a percentage. I win, they win, everybody eats, right? It's not that simple. Because here's the thing. Let's say the trade doesn't go your way. And with how volatile the markets have been, that's pretty likely nowadays. You're on the hook for all of the money that you borrowed. So if you borrowed $5,000 in margin, right, and you lost that money, weren't able to recover it, you are now on the hook for $5,000. And they'll block your account, they can start selling your shares, they can start diluting your portfolio. And if you don't have $5,000, it's pretty much due at the end of the month, generally speaking. So now you're in a pickle. Now you're ruining your portfolio because you got to sell off things just to pay it back. Now you've got to take money out of your pocket for a trade that you didn't necessarily need to take, but you got greedy and started using the bank's money. This is exactly what's happening with people all over the world, right? These apps are incentivizing people to take risky trades, learn to play options, start playing spreads, iron condors, but not a lot of people understand exactly what's going on. And that's when you get situations like Alex Kearns, who ended up passing away, God bless his soul, because he thought he owed hundreds of thousands of dollars to Robinhood, when really it was just more of how the app made the trade look. This misinformation and not having enough education in the trading world is literally costing lives. And I just gotta be honest, I highly discourage anybody from trading margin because it goes against everything that you look at as a disciplined trader. See, the issue is the mentality, right? People are trading like there's no tomorrow. And realistically, there probably will be no tomorrow for your trading career unless you treat it like this is a long-term game. Unless you treat it like this is a long-term play. You want to trade for the rest of your life, you've got to follow that discipline so that that money can stay for the rest of your life. If you don't respect the money will not respect you back. You have to be so careful when it comes to these margin trades. Definitely educate yourself first. Margin trading is not something that's 100% bad. For somebody who's skilled, somebody who's experienced, somebody who's seasoned, it can be very beneficial. It's the same as somebody borrowing money from the bank to flip a house. Yeah, the house's value may go down, but if you know what you're doing, it can be a relatively safe bet. And the same thing has to apply when it comes to trading. Educate first, practice, before you start borrowing any pennies. Plus, at the end of the day, when you've built a portfolio that comes straight from your hard work, straight from your pocket, that feeling is a lot stronger, that feeling of contentment. And 9 times out of 10, that's all you really need to keep moving forward. That motivation, that positivity, that mindset, that's what separates a good trader from a bad trader. So at the end of the day, this is a short video because it doesn't get as simple as this. If you don't know what you're doing, if you haven't been trading for at least a couple years and you know exactly what you're doing, exactly which stocks to play, it's probably not a good idea to go into margin trading. Because if you mess up, and you probably will. It's just like motorcycle riders. It's not about if you'll fall, it's about when, right? Same thing goes with trading. It's not about if you'll mess up, it's about when. So stay safe, stay away from margin trading, learn the fundamentals, continue to make the money with discipline, and what you'll realize is that instead of chasing $1,000 a day, you'll start making a good $200, $300 a day, but you'll make it consistently. And that's going to end up making you a lot more money than any other risky trade strategy will ever do for you. Because consistent money every single day, every single week, every single month will continue to surpass short surpluses where you do really well one day and you mess up the next day. Follow that discipline. I can't stress this enough. This may be a short video, but it comes with a heavy lesson. If I've misspoken in any way, I do humbly apologize. With that, keep learning, keep loving, and keep growing. My name's Harchin Singh, and I'll catch y'all next time.